Hello and welcome to Fintech Chatter. I'm Dexter Cousins, your host and the founder of Tier 1 People, the executive search firm that helps you hire the top tier of fintech leaders. This year I'm spending more and more time on AI native transformations. If you're an exec, board member, or head of people and want to find out more about what's happening out there, you can get me on LinkedIn or reach out to me at tier1people.com. Now on to today's guest. Clayton Howes is the CEO of ASX-listed MONEYME. I caught up with Clayton at their Newcastle office on their 13th birthday. It's an energizing story, one that's full of challenge, knockbacks, resilience, and optimism. All of the qualities you need to succeed in fintech. So tune in and let me know what you think in the comments. If you are new to the show, make sure you follow us wherever you're watching or listening. And if you're coming back, thanks so much for your support. It really does help me in promoting great founders like Clayton and great Aussie fintechs like MONEYME. Clayton, welcome to your Fintech Chatter debut.
Very excited to be here. Thank you.
I'm a little bit, what can I say? Disappointed in myself. Been doing this podcast since 2019. It's now 2026, and you're making your debut. Why have I taken this long to ask you?
Because it's the lucky 7th year.
Yeah. Well, it's also, I think, quite fortuitous in that it's your 13th birthday. So MONEYME turned a teenager this weekend. Congratulations.
Thank you.
For our listeners and our viewers who aren't aware of MONEYME, do you want to maybe do a quick introduction and a little bit about who you are and what you guys do?
Sure. I'm Clayton Howes, founder and CEO of MONEYME. We're a public company. We've spent the last 13 years developing a technology in consumer finance, and our focus was automation, data, customer experiences. Today, we've got a personal loan, credit card, and car finance portfolio. We've originated over $5 billion in our time. We have a $1.9 billion loan book and growing really quickly. We've serviced over hundreds of thousands of Australians. And what excites me most about this industry is I still feel like we're in day one mentality. It's the beginning, where technology and structural shifts in the sector are starting to make sense. And one of the most fundamental things is the generational change of consumers. 13 years ago, digital savviness was actually quite rare. Now it's just natural. That 27-year-old that I was talking to is 40-year-olds now. And that prime credit quality is just been an attitude that we are hoping to have as we grow up with the consumer that we started with, and it's working pretty well.
Awesome. Yeah. Now, you make a really great point as to one of the reasons why I actually invited you on the podcast, which is that you have been here from the beginning. So fintech, wouldn't it have been a word, 2013? Maybe it's just coming into the psyche of ASIC. Some of your, kind of previous competitors, etc., would have, been on that path of, everybody putting in submissions to the regulators around, okay, how do we define this fintech thing? Do you want to talk us about through your journey and how you went from Vodafone to jumping into fintech?
Yeah, but touching on that early stage of that buzz term fintech, it was going gangbusters ever since.
Kind of like AI today,
right?
Isn't it? Yeah.
Everyone had heard about it, but didn't really know what it was about. And I remember winning Fintech of the Year 3 years in a row. And I think it was because not everyone really knew where it was. We had a bit of an idea. That was exciting.
Yeah.
I was a corporate guy. My past experience at GlaxoSmithKline was an M&A analyst. And when I got a job at Vodafone here locally in Australia, because as you do after living in England for too long, you decide to want to stay because of the sunshine and everything else is too cool. But there was this thing that really drew me to Australia more than the sunshine and the beaches was this entrepreneurial spirit. It existed here. And in my past, being a spoke in a big wheel was always difficult to break through and see how you're going to test yourself on this entrepreneurial journey. I spent a bit longer than I thought I would at Vodafone. I think I was near to 10 years there, but I had the best time and learned financial services. I learned big brand challenger mindsets. I learned technology and the raft of things that makes MONEYME pretty special, from its origination, customer cycles, technology, brand execution, and beyond. So an interesting background for myself personally, having led that. And the choice came about by maintaining course of being good in corporate world, or tapping back into what I thought I was doing here in Australia, and that's intending to be an entrepreneur and give it a crack.
Yeah.
So I jumped off the treadmill and I chose to start MONEYME.
Yeah.
And 13 years ago.
So there would have been a phrase at the time, it's still kind of used, of coined by the Silicon Valley tech giants around move fast and break things. You kind of picked the hardest category in startup land in fintech to kind of, earn your spurs as an entrepreneur. As I like to say, in fintech, you got to move fast and make things, because if you break them, you end up going to jail. Right? So, and it's kind of, it's high stakes game. Yeah. What was it that made you pick fintech over, going into any other, kind of the themes that would have been running at that time?
Occasionally I think, gosh, wouldn't it have been better if I started Boost Juice?
Yeah.
Or Krispy Kreme franchises. Of course I think that, or my mates who've all got gyms, and that's all worked. But the reality is I wanted to do something that was meaningful. To me, disrupting the traditionals, that being the big banks. Here, seeing it in Australia, I couldn't understand why the banks were becoming so dislocated to servicing the customer. How we could do it better was something I thought would be more interesting. I don't think Australia needed another Boost Juice or another gym membership, another gym franchise or anything. But I did think it needed an alternative to the banks for the younger demographic, and technology was being leveraged in markets that I thought could be leveraged here. So I took the hard one. And I looked at the stats and saw, well, what businesses succeed after 5 years? And this wasn't a sector that was quite high on the rank. So I knew the challenge I was getting into.
Yeah.
But that's kind of what makes it exciting.
Yeah. One of the other challenges as well, and our data backs this up, when we've looked at people who've been successful in fintech and those who haven't, 90% of people who make a move straight from corporate into startup leave within the first 6 months. So how, I guess obviously it was your baby, right? So your kind of stakes were already pretty high. Yeah. How did you manage that transition, and what were the big kind of, what have I got myself into moments for you?
I don't know is the answer, but I do remember every day mattered.
Yeah.
Every day.
Yeah.
And I had a plan. And that plan hasn't been realized yet. So I still want to see that plan through. My first day, 13 years ago, I wrote a business plan on a wall, on an office window. I hired the best office, right? It was tiny. It was the size of this desk behind me. And I managed to fit 4 people in there after some time. But I wrote this business plan on the window, and I won't reveal it here, but I will one day when I've reached its destination. And certainly the motivation in the first 6 months was to get to market. And I had this one principle. On the day I launched, I don't want to look over my shoulder and imagine what it would be like to be busy with customers coming in. I wanted to be frantic, managing the demand that I just couldn't physically cope with. And that happened. And that buzz on day one has maintained its course for me. Being in consumer and data rich and changing consumer behaviors and expanding products and launching new products, getting cheaper capital. Getting cheaper capital means cheaper prices. Cheaper prices means better audiences, means more challenge. The momentum has not shifted other than maintaining its course of, this is an exciting place. So it's hard for the first 6 months, but people were getting caught up in this sector going, it's challenging to get a credit license. That is absolutely not true. It took me 3 months personally to get the credit license. I didn't have lawyers. I wrote all the policies. It's not hard. And this was pre-AI.
Yeah.
Right. This is actually punching this stuff out, right? And so I think the first 6 months, I don't think it's as difficult, but I think you need to have that ambition about what future looks like.
Yeah.
That North Star is important.
Yeah.
Yeah.
Interesting that you said there around, the kind of licensing pieces, because that is something that I think, again, is, makes it difficult. Consumer finance is a really difficult category.
It is.
We kind of talk about fintech being difficult, but then, you kind of go narrower again, and consumer fintech is probably, for me, the kind of pinnacle, right? Like, it's like the, New York song. If you can make it there, you can make it anywhere, I think.
If you can build this business, true story, you can be an Olympian.
Yeah.
It's demanding.
Yeah.
The controls are not scalable. Like the regulation that you've got to exist here. If you can break through and get to the scale, right? If you can get to that scale, your natural mode, or the barrier to entry, the bar is so high that it actually gives you a little bit of confidence that you just need to get there, and it's harder for competition for entry. But I totally agree. It's not scalable. It's built for banks. It's built for large teams to manage these complexities.
Yeah.
It's built with, a high cost structure. And then it's always difficult because the consumer at the end point is in a favored position against this regulation that's designed to be that way.
Yeah.
But again, it's part of the challenge.
Yeah.
Challenger mindset. If it was too easy, everyone would do it.
Exactly. So you went down the path, Office for people, started to really get momentum. At what point did you start to think, hey, we kind of should go out and list?
Oh, the listing decision was interesting. So I spent all my money. I sold my boat, put my wife's intended house that she wanted to live in on pause.
Yeah.
Did all the things. So maybe part of the first 6 months why I didn't give up is because I had no choice. We had to keep going, right? When I grew past self-funded, I brought in one of my business partners now, Scotty, and, off a handshake, capital came through. I quickly grew out of that and moved into family office funding. And we're going back in 2015 timeframe, right?
Yeah.
There was no real institutional money for startups. It was too early, right? And so moving through family offices, there were tier 2 lenders, and I was running out of scope here, right? I had a business that had a $90 million loan book, too big for family offices to support, too small for banks. And public markets were very favorable for our sector. And with the likes of some of the guys like Pepper and others, it was a very obvious place for us to access capital. So in 2019, in December, I listed MONEYME. And that was because not intending to sell at all. It was purely to have access to growth capital and be efficient with access to growth capital.
So 4 months later, then the world locks down?
Well, I wish it was 4, but it was 2.
Yeah.
no one predicted that.
Yeah.
In December 19, we were off to the races, and then the world locked down.
Yeah.
Books started changing. Banks started finding it difficult to service new products and do anything, really. I remember we had a document to sign. It was near impossible to get a bank to sign it because they were grappling with what wet signatures, how this all worked. It was actually physically a challenge. The market said that everyone's going to lose jobs.
Yeah.
And the casual person's the most risky. Well, everyone that was a casual had the best job because they were supermarket people. They were, in nurses and all those sectors that were bulletproof, immune from any sort of sector. So there were lots of ups and downs, and but the reality is when you've got a technology first business, you come in with a challenger mindset. You get the advantage of being able to see things and move fast.
Yeah.
And our early listing stages didn't do anything other than beat every single forecast we put out there. And that wasn't just because it was on a trend. Everything changed, but it was the mindset and shift in this, this culture and DNA of being a challenger, seeing things first and executing. And now nothing's changed since that point.
So how did the SocietyOne acquisition come about?
Well, isn't that another interesting one? So when you listed on a full growth tear, everyone loved us, but there was this word consolidation. It was the biggest buzzword. So consolidation. We need a leader. A consolidation, strategy is well supported by institutional investors. And I'm like, okay. So we'll go and buy the best one. If you guys want consolidation, capital markets are demanding, and all these shareholders that I've got, right? I'm talking to them. They said, consolidation, can you lead with an acquisition? And, the intrinsic value that gets, the buzzwords that come with it in my former M&A days was too real for me. So I went and I struck a deal with the shareholders of SocietyOne, and I bought that business. But here is timing. Like, you won't believe this. When you're public, you have to do everything behind the scenes and, in isolated, controlled environments. And you do that. You do this capital raise. And then the day that you want to transact is the most important, critical day. Like, you go, right, this is the deal. This is what it is. And everyone closes up. And it's formulaic on that day. Well, guess what that day was after I decided to buy this business? The day that Putin put a tank into Ukraine. It's like, okay, well, I've seen this.
Your timing is impeccable.
I'm pretty certain for whatever sins I've done or the challenges or lessons that is intended, I've had my fair share there. Can you believe it? Deal's done. Putin's put a tank. You're public, and the capital markets use this exit, which is we're shut.
Yeah.
So now I'm stuck with this business that I'm bought with no money to pay for it. And here's the entry point into challenged capital markets environment. And the lesson was this: private equity are very, very favorable when money and public markets are strong. When money and public markets are volatile, private equity are very, very strong. They're entrepreneurial at the best of times, right? And so that was a bit of a challenge, working through that, protecting public markets' interests as best as possible, maintaining the business's course, managing a challenged macro climate. It's very interesting. And here I've got now two screamingly successful, high-demand businesses for money, because SocietyOne came with its own channel and strategies, which was excellent. And MONEYME was also excellent. The good news is that it's a bit of short-term pain. And very quickly, we embedded the good parts of SocietyOne. We achieved all the unit of economics that we wanted, and the asset was underappreciated. And under our management, that asset's thrived. It's bigger. It's emerged onto a single platform, MONEYME, and the customer experiences have been sensational for those SocietyOne customers. So, a bit of short-term pain, bad timing. Had I done that deal the day before, it's a different story. But, hey, that's that's interesting all in itself.
So you're now is it a $1.9 billion? It's
$1.9 billion, and that was on my last reported date. So obviously we're on a growth tear, so it's just continuing to go up.
So what does the path to $5 billion look like?
Strategy's clear, right? We are a digital technology that's creating efficiencies for customers. Fundamentally, customers are underserved. If you try to phone your major 4 banks right now as a customer, good luck in speaking to somebody to resolve your problem within an hour. Good luck, right? We think time is the most valuable thing in our life, right? And there's no question that it is. Waiting an hour, and you aggregate that amongst the hundreds of thousands or millions of customers, that's a lot of time wasted. Now, that's a long, long answer to this 5 billion. But the trajectory we're on is simple. Create a better value proposition for customers, treat them kindly and fairly, and value their time, and use digital technologies, which is being accelerated by AI now, to get us to that point of 5 billion. It's just a matter of maintaining that discipline and execution. Our brand is thriving. Our 3 products are not being contested by Commonwealth Bank, which is a good thing. Like, I choose a swim lane, and maybe a bit of advice for anyone starting. Pick a swim lane that you're not going to be drowned out by the behemoths. Right? Mortgages, business lending, and other big institutional infrastructure required products or swim lanes, they're not us. Consumer, credit cards, personal loans, and car finance. Those 3 value propositions is actually in favor of us as a non-bank with regulation changes for banks. So I can see this line of sight. With our wind, the wind is in our sails. We've reached scale. We've got capital market support, got the customer base. So I think 5 billion is not too far away from us.
Can you talk me through the Horizon platform?
Good tech. So most businesses, they start your finance business, they'll do traditional, well, let's go hire finance people.
Yeah.
The treasury people, the accountants. That's how you start. That's how everyone started in this sector. Well, I thought, no, I'm not going to do that. I'm going to build a technology first business. That means I need technology people only. So we built Horizon. Instead of creating our first warehouse, we created our first technology. And this technology was servicing, I remember the first customer was a Commonwealth Bank, young, 20-something-year-old. And I asked him about, why'd you choose MONEYME after he was first through the door? He said, well, the bank's asking me for pay slips and I work in this joint. I said, all right. And they're going to take 2 days to lend me some money. You guys did it in about 3 minutes flat, and there's no other option for me. That was on the Horizon platform. It was built for high automation using data intelligence really early. And we used AI. We created our own algorithmic AI. So it was mathematical modeling that looked at, data points and gave us confidence factor and risk. It's much faster and easier now with AI, of course, but same principles apply. So Horizon is the full end-to-end technology stack that can cross multiple geographies, multiple languages, multiple credit products, have revolving fixed facilities, asset-backed. It's a bank's infrastructure.
Yeah.
And that's been built using 450,000 plus developers hours. So that's our genesis, and it's our unique advantage still.
And is any plans to kind of go and white label that and expand the business, or are you kind of going to keep it purely as your bespoke?
I think it's a distraction. I don't know if that's right or wrong, right? But we've certainly been asked for this. And in my view, the long game is to you protect your most valuable asset.
Yeah.
For us, that's our unique advantage. It's also a distraction. I want our tech people to be working on our products. I want them to be working on, the next generation of technology as opposed to managing somebody else's demands. So selfish or strategic, I'm not quite sure what it is, but certainly I enjoy having the technology for tomorrow's consumer in our hands and in our control. And when you look at our operating cost to leverage, our leverage ratio of operating cost, you look at our outsourcing versus what we actually built inside, it's working.
Yeah.
Like, it is without a doubt a very, very obvious strategic benefit. It's pointless in the beginning. When you got a small loan book and a revenue of, $20 million a year, and you got this big technology team and this big infrastructure, it feels awkward.
Yeah.
But now we're at with near to $2 billion, 250 staff members, 3 big products, launching in new markets. We've grown into our technology.
Yeah.
So that thought process about licensing is going away quickly.
Got you.
Yeah.
So it's 13 years now that you've been at the helm.
Yeah.
Over that 13 years, you've highlighted some really stressful kind of situations, right, and challenges. How have you, or what's maybe your observation, or your partner's observation, or of your leadership style? How do you think that's changed over those years?
I think we naturally learn a bunch of things along the way, and you take them in your stride and you apply them, but put all that aside, like the organic learning from experience. Put that aside for a second. Culture eats strategy, right? And this is what this organization has. I might have set the pace and the tone and the culture in the beginning when I was on the field doing writing policies, embedded in the credit decisions, embedded in the marketing strategies. I call myself a player on the field. And at a point in time, I felt like I needed to change to become the coach.
Yeah.
And you become player coach. And then you migrate into, this state, which is manager. And for me, that recognition of when it's time for me to change my role has been the single most important thing I'd recommend to people who have started these journeys and have gone through tough times. The way you find your value is identifying what your purpose is. And you can take those lessons and you can still maintain this high value culture, but through other people, that it's now their journey to go through and learn and apply the energy that you need. So maybe for me, the lessons in time, I'm not wounded by them. I've actually gratefully got some battle scars that puts me in the position to be the best manager I think this business can have. And without those, tougher times, it's easy to be a good time manager.
Yeah.
But seeing the tough times, the resilience required, who in your team, can dig deep and elevate them to exec roles because they've been through those moments. There's been it's actually been a wonderful thing, I think.
Has it helped being listed and having a board there to kind of give you that kind of nudge or feedback sometimes? Because one of the things that I find Clayton is particularly, founders that are still either bootstrapped, or their earlier stage, it's really difficult for them to let go, and they know that they should do it. And, sadly they hire people with that express purpose, but then find it really difficult to let go. Have you ever kind of had a tap on the shoulder from anyone to go, hey, Clayton, kind of, mate, pull your head in a bit, right? Like,
I think so. I wouldn't say pull my head in. That certainly hasn't happened.
Right.
I'm very considered, right? Very inclusive. It's my personality type, right? I enjoy collaboration with my board. I look forward to the meetings. I don't find it challenging. I enjoy the conversations. I enjoy talking to shareholders and learning what their perspectives are. And, with time, that your true North Star is and there's multiple ways to getting there, and different perspectives are always handy, right? Now, it's not to say you steer course because there's a screaming shareholder, a screaming board member. No, that's not that. I'd be the wrong person if I swayed. But when you have a strategy, that strategy doesn't change. It maintains its course, and it's all about execution. And thankfully, today I still have a very clear vision of what that strategy is. I have a very coordinated 250-person team behind me that's pushing through and breaking boundaries and, winning on the battlefield. And the challenger mindset hasn't been lost. So when I think about being public, that's very low in the order of setting strategy, creating a culture, having a challenger mindset, and execution. The boundaries in which we have to operate under an ASX listed business, I'd do that if I was private. Like, it is discipline that perhaps in my corporate days, I had that discipline in any case. The fact that there's a structure, the fact that things are a bit more public, I find it a bit of an advantage. I find the ability to communicate to large institutions and banks where information is public, they're audited. I find that an actually very helpful place for transparency and inclusion it's actually part of my strength. So I enjoy being public. I know the share price looks like terrible, but it only matters if you're selling. But right now, I'm enjoying being public still.
One of the things that you mentioned there, which I think is, I'm really interested in digging a little deeper on. Every single business that I've dealt with hits the same problem when they start to scale. They'll start off with an initial product. Customers love it. They grow, they get funding, and they've got to grow more. And so they bring in a chief product officer who, maybe isn't anywhere near as close to the customer. And they start building things that they think they would like or that they think are cool. What's your kind of advice to other founders as to, when to kind of, pull back from that and the customer, and what things you can never, ever sacrifice if you want to be successful?
You never lose touch with the front line.
Right.
My day is spent, at least a fair proportion of it, learning what the front line are doing. I walk the offices, I sit with my team, I hear and I collaborate in a way that's so organic that you pick up where the gaps are. You pick up what the competition's doing. You pick up where the opportunities lie for efficiencies. You're able to navigate this complexity by hearing what's happening. And the business is very much alive and it's exciting. Like that's the bit I would find very challenging to be relevant if I wasn't close to the front line. I'm still deep in the product development.
Yeah.
I'm still deep into the technology and marketing architecture. But now I have experts that are just better than me at it.
Yeah.
But I haven't lost any bit of ingenuity or interest or what value I can create. I've just had to keep up.
Yeah.
Right. And that's how I feel like every day. I don't feel like I've now at a higher level of where I'm not, close to the action. I'm more in the action, but I just don't have to do as much because there's experts doing that. So my advice to founders to come back to that is the day you feel slightly disconnected from the business, it's somebody else needs to take over.
Yeah.
There's no one that cares more about this business right now than I still do. And I have a lot of people that care about this business. And so fundamentally, it's because I believe in it. I believe in its people. The guy I first hired, James, he was out of university. He's now my chief of strategy and he's coming up, won't be long, and he'll be 13 years in this business. And there's a third, fourth, fifth, sixth, seventh, eighth, 10th, 50th, 100th person with the same trajectory and storyline. I'm having this, what I call founders dinner on Wednesday. It's not that there were 15 founders. It's the foundations of this business with these people that are so close to the action. So it's not me being close to, the product development and the consumer. I have a big foundational team that are equally as close to the action. So, and that's what we get, we get our thrills from.
You got an office full of people here.
Yeah.
A lot of businesses have struggled to get people into the office. What's been your secret?
I can't keep them out, right? They want to be here. And the I think about it this way, right? I've got 3 offices, and the Sydney office is where most head office roles exist. And it's got its own energy and it thrives. It's where the strategies are set. My execs are all there every day. Everyone's there every day. Sometimes we have to control it to 4 days a week because we don't have enough space for everyone to be there 5 days a week. Newcastle, different value proposition for staff here. It's easy to get around. There's no long commutes. Newcastle's an easier. The university where we hired most of the guys are across the road, and that was the genesis of this idea. So why don't we put the jobs where people actually want to live? The cost of living pressures are a little bit different, and we create an environment, and it's a nice space to be in, and there's an energy. That's just the case. I remember, and I still do, not enjoying myself going to a restaurant that's half empty. But the place can be, if it's full, let me stand in a line. I'm waiting to get into that place. And everyone has that mentality here. It's got momentum. It's got energy. The people are here. They're collaborating. And it's organic.
Yeah.
So
awesome.
Yeah.
Now you're a certified B Corp as well as being a listed company. How do you kind of manage those two things?
I changed the constitution, right?
Right.
So when it said, this constitution shareholders needs to change. We need to now have a charter that says we consider all shareholders' interests, stakeholders' interests for what ends up being the greater good of society and its communities that we operate within. Now that principle guides our North Star around, whilst we're building a business, we're building an ethical business that's got sustainability at its core. And we don't have a big carbon footprint. We're digital. We're new age, so we think about things differently. We also have a very strong discipline about what impact we have on our communities and the environment we're operating in. One of the products we launched to stand by that is this free credit. We call it a credit score tool. Effectively, every single customer of MONEYME has access, and you don't even have to be a customer. You can sign up, and for free, which we pay for, we'll give you your credit information that bureaus hold. It'll tell you how your data is being used, how you rank among, in society. And so it enables you to think about your credit and your credit profile and how your data is being leveraged. Now, we think that's important. That's a benefit to society. The younger demographic can understand the importance of credit how to manage it, and in effect get cheaper pricing, because over the course of time, when it's time to get a mortgage, you want a good credit profile. That's just one of the many, many, many things we do to help influence our footprint on society. B Corp, it's a great standard. We had to pick a standard to maintain some boundaries, and for us to be able to, have a framework that exists. And of course, it's also a helpful recognition of what we're doing in that ESG space. So I don't think being public and being B Corp certified are anything other than congruent with what's right for shareholders, what's right for the community, and what's right for the business and its stakeholders is congruent.
We've talked a little bit about the present, and I think what's really great about what you've shared is it really does, I guess, encapsulate where I believe that we're at right now, which is, you started off with Fintech 1.0, which was, let's improve the technology, let's make it a bit cheaper for people, let's improve the experience. But what we've not seen a great deal of is new products and product evolution. And we're at a point now, certainly where, even kind of the well-off in Australia are starting to struggle, and I couldn't think of a more critical time for fintech to step up and start innovating around the product side. What are your thoughts about the future, and how are you positioning MONEYME, for this kind of challenging environment that we're in?
It's a good question. There's a spectrum, and certainly and not everyone's doing it as tough as each other, right? The key for us is to navigate to the market that we can service with confidence, right? And what that looks like for us at the moment is, by design, servicing a high credit quality customer, having, customers with behavioral traits of how they consume credit. It's not just for ambitious purposes, but, cash flow management. And it doesn't matter how affluent people are. Cash flow is always something that you need to manage, right? And we participate in those times where people's cash flow is important to them. Cars, for example, we finance cars. And one of the product innovations for us was to get a car being able to be driven from its showroom on the day you decide to buy, not 8 days later. Time, remember, being the most important factor. You go on a Saturday into a dealership and you'd want to buy the car. You make all your commercial and, decisions as a family, and this is the right car. And you get to buy this car and drive it out 8 days later.
Yeah.
Right, with this convoluted process with no transparency of what this person's doing behind the desk. And are you getting the best rate? Who knows? So we changed that game entirely. Put the power into your hands, and you can set up finance, structure it the way you want. You decide about how much of a deposit you want to make, what your repayments are. And if it fits for you, you can establish that loan and drive it away without any middle person friction points and costs, and drive it away within minutes, not days, minutes. Right? So the product innovation is literally replacing banks' traditional infrastructure that's expensive, and putting the power in your hands. That's really key. But we're only just touching the surface.
Yeah.
We have credit cards, and credit card serves a valuable purpose here in Australia. Cash flow management, right? We have income that's coming, but we have stuff that we need to, whether it's school fees and whatever it is, right? Petrol's expensive, all these things, right? So what we did is, instead of earning Qantas points, and I use Qantas as an example, but frequent flyer points that maybe will be valuable at a point in time. I haven't found any value. What a free sandwich at a lounge is for all my hard work accumulating these points. Could do a bit better. The younger demographic don't see it the same way. They're not interested in that free sandwich, right? But what we created is cash back, right? Looking at international markets, we've replicated one of the most genius things. If I spend $100 today, I get my value up front, and it's a discount on my bill. And it all works with interchange and all that stuff. So all of a sudden, we've gone and created a time efficiency in the product. Not only can you get the product faster, but the rewards and value recognition is instant. It's like, now, I'd definitely take that as a value proposition that's innovation, right? So now when you fast forward MONEYME into the future, Macro is certainly unclear, but what is clear for us is the ability to leverage data, navigate around some of the riskier obstacles that exist, because we can't service everyone. We must service the target market that works for our business model. And it's quite big because, again, we got cars, we got credit cards, we got personal. So it's a big target market. Being able to navigate that well, being able to continue to scale so our cost of money is getting cheaper. In 3 weeks' time, I'm overseas structuring deals for cheaper money again, because money is very cheap when you've got a track record, the trend, and scale. And that's working for us. So we're coming back to Australia with more efficient capital. That means better pricing for Australians. So I'm enjoying the trend that we're on now. I'm going to continue by saying we're not going to stop here, because there are things still underserved. There are people that like, for good or bad reasons, cryptocurrency. It's an asset. People hold on to that, whether it's, valuations are somewhat unpredictable. How are we entering into that value proposition? Perhaps they earn, instead of frequent flyer points, they earn cryptocurrency at the right price, or who knows. But there's things in the making for us that I can't really talk too widely about on a podcast, but very excited about what that innovation and product mindset continues to look like. But like I said, starting with cars, it's fast, it's efficient, it's cheaper. Starting with credit cards, it's more meaningful, value propositions more tangible. So you'll continue to see that from guys like us.
Awesome. Well, Clayton, it's been fantastic to have you on the podcast, and thank you so much for being so generous with your insights and sharing the journey. We get amazing talent listening to this podcast. If anybody's potentially interested in careers at MONEYME, where's the best place for them to find out more?
Please, information's available on our not only our website, but we're quite active. Media at moneymeme.com.au for people that are looking for opportunities. I have no hesitation in you sending out an email to myself. We're very efficient. I like to hear from people. So my email's easy. It's clay@moneymeme.com.au. Forgive me if I take a little bit longer to respond to some of those potential candidates. Don't take it as disinterest. Just take it as a really busy, enthusiastic CEO that will get to you. And allows me to also see what people are interested in our business. So hopefully that's helpful.
Well, brilliant. Congrats on making it to a teenager. Look, let's do another one when you turn into an adult, eh?
I'm excited about that. Yes, it's been a great 13 years as an adolescent. I think that's what you call under 13-year-olds. I'm not sure. This hopefully is going to be a well-behaved teenager.
Yeah, great. As always, folks, you can connect with me on LinkedIn and Twitter. If you're new to the show, make sure that you follow us wherever you listen to podcasts, or give us a like and subscribe on YouTube. And if you're coming back, thank you so much for your support. It really does mean a lot to me. Until the next episode, keep well,